going to be going and diving into the Fibonacci retracement tool, but one thing that I do want you to know before we start this, which is another important component to drawing out the Fibonacci retracement tool the right way, is you have to understand market structure. As you guys can see right here, to my left, we have a bullish market. And to our right, we have a bearish market. I drew these up specifically this way because we need to identify how we are going to enter these markets while applying the Fibonacci retracement tool, and this is the only way. So right here, right, we have the bullish market. In a bullish market, if you haven't seen my previous video, you definitely want to go check that out. In a bullish market, the market will consistently make higher highs and higher lows. All right, your higher lows are going to be your buying points of interest. With that being said, when it comes to drawing up the Fibonacci retracement tool, you're going to be drawing your Fibonacci from the current higher low to the new current market higher high. This is exactly how you're going to draw it out. So you're going to go from the higher low to the higher high. Within the Fibonacci retracement tool, your premium discounted levels are going to be from 0.618 to 0.786. I'm gonna put a box right here just so that way it's highlighted. Now the reason why you wanna buy from these levels is you wanna buy price at the cheapest price possible. Think about it like this. You go into a PacSun store. Everyone knows what a PacSun store is, or Zoomies or Vans, right? You're going in the store and you're looking at all of the highly discounted prices. Now let's say that there's two items, right? For whatever reason, there's two of the same shirt, and this shirt costs $50 while this shirt costs $20. Which one are you buying? You're buying the $20 shirt. Why? Because it's heavily discounted. Why would you buy the more expensive shirt when it's the same shirt? Moral of the story, you want to buy the market. In a buying market specifically, you want to buy at the lowest price level possible. In a specific bullish market, you're going to want to be buying when you're at a premium discounted level, so that way you can enter at the cheapest price possible. Now, vice versa for a bearish market. When you're in a bearish market, you're going to be looking to sell from your current lower high, as the bearish market will consistently make lower lows and lower highs. So in this scenario, we're going to take our Fibonacci retracement tool from the current lower high in the market structure to the current lower low in the market structure. And just like in the bullish example, you're going to want to be selling from the premium discounted levels of 0.618, 0.71, and 0.786. And because I really want you guys to understand how you can use the Fibonacci retracement tool to your advantage, I want to actually share with you guys the coordinates that I have for my Fibonacci retracement tools. All right, you're going to have the 0, the 0.618, the 1, 0.71, 0.5, and 0.786. All right, guys, so without further ado, we just talked about the examples and how you can use it in a picture perfect scenario. Now we're going to bring it to the actual charts and show you how I took this buy on NAS 100 this past week. All right, guys, so as you guys can see right here in current price action with NAS 100, price went high, low, and new higher high. At this point in time in the market, I was starting to then see price go into a more bullish environment. So what I did was I took the Fibonacci retracement tool and I marked up from this higher low to this higher high. To our left, we can see that there's an order block, which is going to be another point of interest in this setup. As price starts to retrace, we can actually dive down into the smaller time frames and look at this bearish counter trend. For those that don't know what a bearish counter trend is, just think of it as a short-term bearish downtrend into a point of interest. So as you can see right here, after price had reestablished that retracement down and we understand the higher time frame narrative, now as price goes into this area in a bearish counter trend, making more lower lows and lower highs, all we got to do is wait for that bearish counter trend to break. So as you can see right here, we have lower low, lower high, lower low, lower high, lower low, and close above the previous lower high. As price closes above that previous lower high, you'll then get a retracement back down into that area, and then you'll see price expand on a higher time frame. But most importantly, in this example, what I want you guys to take away from this is that price came into the level of 0.786 and 0.618, and then started to reaccumulate and then expand from that point. Once we understand that the smaller time frame is now in alignment with the higher time frame narrative, we can then go into the higher time frame and look for some targets to exit out. So this white line right here specifically was my area of interest to see price go back into, since it hadn't been mitigated. And whenever this happens, I always look at these areas because this is exactly where price needs to go before it continues going the opposite direction, if and when it does. So right now what I'm going to do is I'm just going to let it ride out and show you guys exactly where price landed. So there you have it, guys. This is pretty much how you use the Fibonacci retracement tool. If you guys want more videos and more examples on the charts, just feel free to comment that down below. Now that you have this tool in your arsenal, definitely go out there on the charts today and start applying it while you're backtesting and also looking for future setups. If you guys enjoyed this video, make sure to do all the above: like, comment, subscribe, and share with friends and family that might find this video valuable. And one last thing, don't forget to hit that post notification bell so that way you get updated every single time I upload a brand new video. I'll see you guys on the next one. Peace.